All right, good evening, guys. Ken at Tortoise Capital. This is the nightly strategy podcast for March 26, 2024. Joe and I just finished up this latest cohort of Creativity 202. It was better than ever. We're getting ready to start a new cohort probably the middle of April. I want to get some course notes together. I'm also putting together some creativity curriculum for the United States Army. We briefed the three-star general on our program for creativity, and he directed his staff that our lessons and our curriculum will be taught across all Army schools going forward, which pissed his staff off a lot, which makes me feel good because they've been dragging their feet on this. But he saw the value of it, and we are going full speed ahead and adding about 8 hours of new curriculum in a course that's 600 hours long. So we're adding more than 1% of new curriculum for creativity for all Army senior leaders, which is, to me, a pretty good testimony to the potential and the power of that course. So what I teach in there is even better than the distilled version that I can give the Army. But you needed to know that it's being taken very seriously by some very serious people. All right. Let's look at we're on Alcoa now, and we're looking at 30-minute charts. This is the hybrid swing course. This is the standard lineup of symbols. Some of them we trade on 3 minutes as well as a turbo trade for sniper, but we'll cover that after we go through the standard 30-minute charts. All right, so this yellow box represents today's price action, the high and the low. This orange line that you see here is the 5-day anchored VWAP. And this blue line is the 10-day anchored VWAP. And the relatively new additions to our work, but we're liking it. Now, this one enters in the second half hour. It's an owl entry because the R30 has rolled over after a significant up move. And there's our standard risk box. It crosses the Bollinger Band mean. It bottoms out here, and then as it's coming back to here, the R10 rolls up. So I take the exit at the skin of the dragon and collect about 0.5 R. That was I think slow. I think I should have been taking that somewhere in here after it sold off sharply and found support where it had always found support and then started to reverse. I think I should have captured it here for a full R instead of here for half an R. So that's some improvement for me to take note of. AI, after the morning gap up and then a harsh sell-off, I missed both moves. I played the rebound, standard risk, and then it scratched. Just went nowhere. Caterpillar tried to 1, 2, 3 entry, scratched. Cliff, this was a risk box off the low, crossing the VWAP intraday, getting ready to test the PSAR. It ran up, exited for about 0.3. So there was almost no follow through on the long side except for this one. So this is CVS, and this one was a little rocket ship. So here's where it closed yesterday. It opened here and then sold off, then rebounded, at which point I woke up and said, oh yeah, that's right. Let me put a risk box on it. And then this thing just continued to rocket to here, and then came back, and I was happy to get out with 3R in hand for a 1-day sleigh ride. Scratch in DIA, maybe a fractional loss. Disney, this was the second day of a 2-day move that began with this gap up and go, and it closed here yesterday. There was some initial volatility. It settled down and continued to run. There was such a big sell-off in the afternoon that when this thing started to roll over, I didn't want to hold it overnight. Nervous in the service, so I exited here with about 3R in hand for a 2-day trade. Pretty happy with that one. I still think Disney's in play, but the larger market uncertainty was troubling. I missed the downward move in Devon Energy. No trade in emerging markets. If I show this one, if you are able to trade Ethereum with the direct currency, we exited ETHE. This is where I would get short if I could in ETHE, but I'm also trading the currency, and that's a nice recovery back to the 5-day anchored VWAP for about an R. EWW Mexico, this was a COTA 2 reentry and about 3R on a very nice orderly move. Brazil, scratch. Intel, no, I'm sorry, this should be, this is just maintaining the position. I still have a belief in tech. This one resisted the sell-off really well today, so I kept that one in play. IP, now this one we held long overnight, so we had the entry from yesterday, which closed here. It ran all the way up in here, and then this is where the big sell-off began to occur today in the markets. This thing started collapsing, so I preserved half the move here, and then it just kept dropping. And then when it fell this far and ran through the 5-day anchored VWAP, I just speculated in with one and then watched it do this, and it bounced off the low and came back. So exited here for about 4R and was happy to play that little ride. And it was unusual behavior in a giant global international paper company. Hard to understand why that was the case. I haven't looked at any of the news, but it just tells you how quickly things can change. No place for a nervous person. IYR, we got a continuation reentry yesterday, and it rolled down to here. We kept the position open, and then today it just kind of went sideways, and the market was selling off. And then in the last half hour, the bottom dropped out. So I'm going to hold that one overnight as well. And that one's holding almost 3R and no support in sight anywhere. So I'm liking that one. Coke was a intraday 1, 2, 3 for a scratch. Regional banks, fractional gain. It was over an R at one point, but I was hoping for more, but it kind of drifted back up. And that is a collapsing dragon off this little belly of the RL10. That was a support level. So collapsing dragon, it never really collapsed. McDonald's, no trade. Merck, no trade. Microsoft, no trade. I missed the short completely. Marijuana, we covered the short from yesterday after it sold off hard and then started rebounding. I finally had to get back out at the PSAR. I think I gave back too much on something that is well known to be that volatile. I think that was bad management of an open position. I should have remembered that marijuana is that volatile and done better. I should have been exiting it somewhere around the skin of the dragon, I think. Nike, no trade. NVIDIA. So I tried this little 1, 2, 3, and it rolled over, and I took a half an hour loss. And then this is where the bottom fell out of the market, and it coincided with this thing hitting a collapsing dragon. So I used the same size risk box. It sold off harshly and then started to stall. So I just exited here because this would be a candidate for buying on a dip tomorrow, and I didn't want to get caught with an adverse gap. So we just took the 2R, paid for the half an hour loss, and netted 1.5. Clean energy, no trade. It also collapsed in the afternoon. Palantir. So we had the one position from yesterday, added a second position when it broke above the new high of the day. Then this is where the market started to collapse. And when it hit the edge of the dragon, I exited both positions for about 3R. Rivian, I'm short one, and it really got hurt hard in the afternoon sell-off. We're holding about an R, and it closed at the low of the day. SOUN, no trade. You can see how SPY just collapsed in that last hour. Treasuries, on the other hand, experienced kind of a cotta 2 in recovery, so that looks like a follow through for leverage traders tomorrow. I would not be surprised to see that get back up to vicinity 94.5. Tesla was a big gap up and continuation, so I speculated in, was able to preserve about half an R. Walmart took about a third of an R and missed the collapsing move. US Steel. So we had this entry on the cotta 2 yesterday, reinforced with a second position on momentum. And I felt like tomorrow was risky, and I wanted to just cash a couple R and reduce overnight risk. XLI was a entry on a grinding downward collapsing dragon, and that turned into plus 3R. And that's another one where this would be a natural location for them to hit this hard in the morning with a positive gap. And so I took the profit when I could to reduce overnight risk. Looking at looking for a sniper trade of the day here. There we go. All right, this is Tesla. So this was the 3-minute version. After the big gap up, here's your opening range 3. Here's the continuation trade to the upside. This is the $1 R10 risk. That's $1. That's the size of the risk. It ran all the way up here and then started to roll over. When the R10 rolls over, I take the exit here, and that gives us about 2R. Tried the cotta 2 when it held above the VWAP. This scratched. This one rolled over. The owl rolled over, so the RL30 rolled over, went through the dragon, broke through the Bollinger Band mean, hit the PSAR. So now I'm short with the standard risk box, collecting 1R, re-entry cotta 2 short for about 2R. So some reasonable tradable moves. There was another late afternoon move, but I had no will to keep trading at that point. Yeah, and then this is DIA. So here was an opportunity for a low, a higher low. There's a cotta 2. And it's crossing the VWAP. So that's a situational trade that I like. There's the standard 40-cent risk in DIA. That's about 40 cents. That's an R10. That's the R10 in DIA. This thing ran all the way up. Here's where the peak of the R10, it comes back. I ended up getting the exit at about the spine of the dragon for about 1.5. Tried the Kata 2 re-entry scratch. This was part of the entire market melting down right here. And when it broke below the VWAP, they speculated in and then watched this amazing move. When it rebounded from here to here, I exited at the skin of the dragon for another 2R and no overnight risk. A great trading vehicle there. This one is Mexico, last sniper trade of the day. This is another situational trade. You notice the RL30 rolls over, the PSAR flips. This is an owl entry, very relaxed. I like them in the early morning owls. There's your standard risk box, which is about, the R10 is 13 cents. I use 15 cents just to make it a round number. It runs up. Here's the peak of the R10. There's the exit at the skin of the dragon. 1R. Kata 2 re-entry, standard risk. Here's the peak of the R10. There's the exit at the skin of the dragon. 1R. Here's a Kata 2, standard risk. Here's the peak of the RL10. Here's the RL30 rolling over. That's an owl exit for 2R. Here's a Kata 2 re-entry, standard risk. There's the peak of the R10. There's the exit, half an R. So that's about 4.5. Just trading one pattern, standard rules, nothing special, 4.5. In EWW, my favorite symbol for practicing the Kata 2 challenge. That's what this was all day, Kata 2 challenge. Take a look at the traders. Had a few opportunities here with Eugene. Ends up grinding to a scratch kind of a day. Aiming for simplicity and a 0.20 trailing stop. Waiting for entries on new highs and new lows. So he's basically experimenting with simplicity on that one. Kind of a scratch day. Here's Ilker, minus 0.8 on Alcoa. This one, when you see that gap up and then the harsh sell-off, somewhere in here is a short. I would say probably like right there. Skin of the dragon, previous PSAR, and then that will improve your performance. You'll get this short, which would be a little better. There was a re-entry available in here, still pretty good. This is, he's looking at the Aussie dollar on 30 minutes. Or that's a good shot on the breaking of the PSAR. And I think that's the, trying to see what that is. Not sure what that indicator is if that's the 30, and if this is your RL30, maybe this is the 200 or the 90, not sure, but still a reasonable entry. That's a good cover to get paid. CLF grinds a little bit. This is one where when you get this kind of a rejection, big gap up, and then harsh sell-off, that's a trap. And even a 1, 2, 3 entry would be here, which would make that a winning short instead of a losing short. But this is still pretty good. That's worth a shot. And then on this one, I think you got it where you could. You were looking to cut losses early, and I don't disagree with that, but I think there's opportunities in here when you're ready for them that if you make Cliff, you should only do that if Cliff is one of your standard reliable trading vehicles. All right, here's Brazil. This one, that stop is really tight and you're chasing in the middle of the sideways chop. So maybe some over trading. And again, on this one, it opens here, it gets this high, it gets you in, it closes here, it opens here, starts selling off immediately. Take it right there instead of suffering an entire 1 hour loss. You could trim half an hour off of that one. Intel, dude, here's yesterday's close. Look at this gap down. This is a screaming alert. If you take that same size risk box and you bring that down in here, you could be getting an entry somewhere in here or here and get this and get that screaming move of probably 2R. I like this as a kata 2, and that's a pretty good exit. I think this had been so choppy sideways. I get that for one additional shot. I don't mind that at all. I just think you had 2R available in here. Need to start looking for the large gaps lead to large corrections or large continuations. It's never a large gap immediately to the new fair value with no volatility. There's always consequences. And here's one, that IP. Yeah. Yeah, you got to be there to see that one. Excellent trade for 1.6. Microsoft, you got what was available, which was nothing, a scratch, I should say. You get a piece. Here's again the large gap. Alert. This so with a open here and a risk box like that, there's a trade right there. And then this one, we might have been 1 bar early and get in here. This is, I think this is supposed to go right away. When it doesn't, I like the spine of the dragon or the skin of the dragon. That'll save you a little bit. I love this. I even like the stop and reverse. I love this short. And then I think you got burned out on it because this thing, all it did was pay off all day. This is another good short right here because you now have a clear downward slide. The dragon has rolled over twice. You got a collapsing dragon there. That's a screaming short. Kevin, crushing it with EWW. You out traded me on that one, I think. That's some good work. I love the re-entries in here. This one I think could have been a re-entry, not just a cash. I think the re-entry could be right in here. That's a great re-entry. Stop and reverse, I should say. And George, you avoided the pain and suffering. You gave it 3 hours to work. It didn't. So reasonable way to get out of it. I almost always want to see EEM with a big gap in order to have a big follow through during the day. Like on this one, you see the big gap over here. There's a big gap here, and then that leads to a big follow through sell off. Here's a big gap, and that's a tradable move. This one, hardly any gap, and then pure sideways. So it almost needs the overnight movement in order to get a follow-through trade during the day. All right, let's look at the daily report. All right, we're still pushing near the all-time high here on the 150-day look back, but notice how choppy this has become as it starts to grind and wear out. The 30-day VWAP is still strong, but it feels like this is beginning to weaken. Easier to see on the 30-day look back. So we're on a this was a gap up, all-time high, and then 1, 2, 3, and closed at the low of the day. So again, to me, I could even see the skin of the dragon or the spine, certainly not later than the PSAR flip as a protective stop. You know, the distance between the price action and the Bollinger Band mean, that distance is diminishing compared to how far away it was here. So the river is steaming north like that, and this thing is stalling a little bit and getting closer. So that's a sign that it's stalling and rolling over, coming to the end of that song. Yeah, this is SPY, and you can see that harsh sell-off at the end of the day. There's the 10-day anchored VWAP. It broke through the 5-day anchored VWAP to finish up down here. And that's the first time it's been below that. I mean, this was the enthusiastic run up, and now that's the beginning of a downward sell-off. That's sort of like the line in the sand, the 10-day anchored VWAP. And that's at 516.5. Respect that price. All right. Bullish normal, overbought, but the sell-off today puts it into over 2-day short-term oversold. Still bullish strong, still risk on. It's only the second day of selling, but it was a warning shot. Disney, only bright light. Starting to see more symbols starting to test out here on the auto framer. Big winners, Tesla, Merck. ETF tactical. It was still a quiet day, but there was strength in Mexico remaining. Everybody's watching the US, wanting to see. Small range day, lots of auto framers. These are the ones that, if they start failing, have already fallen the most. So things like McDonald's. You saw the big sell-off in Intel. We're already short real estate. Be ready for more. Intel, McDonald's, and Diamonds are all on the squeeze. I like that. Being dominated by fall, fewer and fewer symbols in the summer. Part of the rollover. Mostly red on the 2-day. There's a few bright spots, but, PayPal, Tesla, Pfizer, and US Steel, but otherwise mostly pain and suffering. Only Mexico and Japan showing any kind of strength. The beginnings of a little flight to safety in treasuries, but that has not been a reliable trade, to be honest. The top three, again, marijuana, Tesla, clean energy, NVIDIA and Intel are in the mix, along with Devon. Still kind of in no man's land here. That's why I'm classifying this as yellow warning, yellow alert. After this recovery in the strong powering north, but this is where the 90 rolled over, the Z-score rolled over. This is where the 30 rolled over a second time after a lower high. So I put us kind of in yellow alert condition, and the R10 is just ready to start failing, which would then pull the 30 lower and would tip the 90 lower too. And then this could really sell off to the bottom of the river. Risk management, fellas. All right, that's everything for today. We'll get this published and posted and be ready for them tomorrow.